Closed borders and grounded planes. The coronavirus pandemic has the airline industry facing the worst crisis in its history.
We had a pretty strong financial sheet, a balance sheet, preparing for something like 9/11. This is probably 3 times as worse.
We think in June there's going to be more demand for flying from May.
We know for certain that come October, we're not going to be at 100%.
If, in fact, travel demand is lower, there very well could be some consolidation.
We've always been keen on consolidation if the opportunities arise.
The priority is on rescuing the airlines. They are the first hit by this pandemic.
Why is it that the German and the French governments, the people who keep telling everybody else you must obey by the rules, are the biggest state aid dopers?
The worry here is the unleveling of the playing field.
Overall, it will take several years for the traffic to recover.
Coming up, CEOs, policymakers, and industry leaders weigh in on the future of aviation in this Bloomberg special, Coronavirus Grounded. Welcome, I'm Guy Johnson. So, in a matter of months, the coronavirus has reset the clock on a decades-long aviation boom. Fuel prices and interest rates were low and demand high and growing. Nobody expected this to change. In America, where carriers remember the effect of 9/11, the impact of the shelter-in-place orders has been shocking.
Right from the start, when we saw this happening, we immediately went into markets to boost our liquidity. Again, I said we had a pretty strong financial sheet, a balance sheet, preparing for something like 9/11. This is probably 3 times as worse. So we went in the markets for as much loan debt that we can get. We've issued stock. We have taken the grants and the loan from the government. We have applied for the second loan, and we'll make that decision shortly about that. And then we're also finding other ways, in essence, to a degree, improve your liquidity to the best possible point, and then work on your cost structure to bring the cash burn down to a manageable degree. And then it's just time oriented.
Now, cash burn today is roughly $40 million a day. In other words, you are spending $40 million a day, in effect losing $40 million a day. Is that more or less right?
It's more or less right. We'll keep working on that, but it's roughly the same number that we've reported publicly.
So your peers in the airline, your competitors, let's say American or Delta, are they in the same situation, I assume, largely?
Yeah, roughly. All of us spent a lot of time together, obviously at arm's length, but working through the CARES Act conversations and interacting with our legislative leaders. And we are forever grateful for the assistance that they've given us. We're one of the few industries that was carved out for this level of assistance, because they do understand the economic impact, the impact we have on the economy and the wheel that we are to juice that. But we've all worked together, and I think by and large, we all have different situations and positions, but generally, I think in the same vein.
Bloomberg Intelligence thinks it'll be 2023 before airline traffic returns to 2019 levels, with high-margin business travel being the last to come back. But making predictions is difficult because passengers are still trying to work out the answer to a key question. Is it safe to fly?
What we're facing now is another real concern that people have with this COVID-19. And I think the industry is really stepping up to the plate and doing a lot of things to make flying safe so that people can feel confident about flying with us in the future.
So that's a yes?
Yes. Yes.
Okay. Clearly, kind of limiting the number of seats that you're going to have on board is going to have a meaningful impact in terms of load factors. So how does this affect the economics? If you take out one seat from every row, how does that change the economics of flying? What sort of load factors does that mean you're going to be operating with? What is an economic load factor to break even? And how does it compare with what you were looking at before?
Yeah, so for the industry, break-even load factor is normally between 75 and 80%. So the fact that we're capping flights and keeping middle seats free, keeping aisle seats free means obviously we're going to be limiting flights to below that break-even load factor. So it's not sustainable in the long term, but it's very important right now. And it's one of those things that we're doing to give people a little bit more confidence, a little bit more comfort about flying.
One of the other factors that obviously is going to be affecting the way that we all fly is that it's going to take longer to get on airplanes. It's going to take longer to get off airplanes. Cleaning is going to be something, obviously, that you're going to have to do a great deal more of. For a low-cost carrier, turnaround times are absolutely important. You want to have the aircraft in the air flying as much as possible. So how will turnaround times be affected, and what, again, does that do to the economics of any given route?
Yeah, it's a great point, and I think out of any crisis, there's always good things that emerge, and I think one of the things that will change for good in our industry is the cleaning and sanitization of airplanes. I mean, it was good before, but I think we're all taking it to the next level, and that will pressure turn times. Again, it's not really an issue right now, Guy, because we're capping flights to under 60% load factor. We have extra airplanes we can bring in. We have a lot of airplanes like other airlines parked and sitting idle. We can bring in if the number of flights resume, and then over time, I think we will adjust. And I think longer term, you will see increased turn times as an industry trend.
So how quickly will demand come back? Here's the CEO of Southwest, Gary Kelly.
Demand is still very, very modest. We're seeing very gradual improvements in air traffic. Our load factor last week was probably around 20% at best. So there are, at least on Southwest, we're not booking our airplanes full anyway to allow for physical distancing on the airplane. So you won't see a full airplane. But the good news is we are beginning to see a recovery. Our government has asked us to remain open for business throughout, so we've never shut down, but we have reduced a lot of our flights.
Gary, as you say, like load factors in the 20s, it is not something that is ultimately sustainable. How long do you think it is going to take to get load factors back up to the level at which most routes are viable, most legs are viable? And do you think ultimately that some routes are not going to be viable at the kind of load factors and seat densities that you are probably going to have to live with for quite some time?
Well, taking air traffic worldwide as a whole, I think we'll see, because we're in a recession, we're going to see a very gradual return of business traffic. That's very typical in a recessionary environment, and that's exactly what we've got. You were talking about international travel earlier. I think international travel is also going to be very slow to return. So I think it will be years before we get back to 2019 traffic levels. In terms of the consumer, historically in recessions, consumers do travel. They watch their budgets. They'll be looking for low fares. Of course, I do think that low-fare carriers like Southwest will see more demand in an environment like this. But I think overall it will take several years for the traffic to recover.
Coming up, the state aid debate. Ryanair's CEO picks a fight as rivals are handed government assistance to survive the pandemic. What will Europe's airlines look like post-COVID? This is Bloomberg. Welcome back to Coronavirus Grounded. I'm Guy Johnson. Europe and Asia went into this crisis with more airlines earning less money than those in the United States. For many, their balance sheets have not been strong enough to survive without massive state aid. In Europe, Lufthansa and Air France-KLM are receiving billions of euros, angering the likes of Ryanair's Michael O'Leary.
What they're doing here is they're filling up their satchels with state aid, and they will use that as we emerge out of the COVID-19 crisis to engage in massive below-cost selling to damage fair or to distort competition with airlines like Ryanair, EasyJet and BA all across Europe. Or Lufthansa will simply use it to buy up all the rest of the competitors in Europe like Condor, which is an inevitability once we're through this crisis. And we've asked the question repeatedly, why is it that the German and the French governments, the people who keep telling everybody else you must obey by the rules, are the biggest state aid dopers in all of this, when other governments like the UK, the Irish, the Spanish, the Central and Eastern European governments are not bailing out their airlines because we don't need those bailouts?
One of the arguments you'll get here out of Berlin, Michael, is that they need to ensure there is a carrier that's going to be able to cater to business people and also longer haul flights that you don't necessarily, a market you don't necessarily serve. If there were no Lufthansa, if there were no Air France, KLM, would Ryanair expand its business to serve those markets?
Well, no, I mean, firstly, the argument is completely specious anyway. I mean, the long haul will take longer to recover, but BA and Iberia all fly long haul, and they're not seeking state aid. I mean, what we've been calling on the European Union to impose under the state aid rules is if the German government wants to give 12 billion to Lufthansa, it also has to give on a proportional basis the same state aid to the other airlines operating in Germany. Not because we want state aid, but that's the way of limiting the amount of illegal state aid that goes to Lufthansa.
Cash burn is now the key metric. Airlines are grounding planes, laying off staff and delaying new aircraft deliveries to preserve liquidity.
We have estimated, the cash burn only for the second quarter of 2020 at around $61 billion US, and you must add to that, the refund of unflown tickets that only for the second quarter should be around $35 billion US. So we are burning cash terribly. It's a terrible cash drain for the industry. So that's the reason why we need a desperately cash injection, and the reason why many airlines are raising cash from various instruments, debts or capital.
When it comes to government aid, though, we have seen Virgin Australia not getting that help from the Australian government. Will we see more cases where we see collapses of airlines like we saw in Virgin Australia? And what's your initial reaction to this?
First of all, we have advocated, almost 93 governments to put together packages to help the industry and to help everybody, of course, in a fair manner. But and so I think it's always for us very painful, very sad to see that one of our members is not is disappearing or collapsing. The risk is if these rescue packages are not implemented and implemented quickly. We need the cash to flow in our balance sheet, in our P&L, that we could see more collapse and more bankruptcies, unfortunately. So the risk for the industry to shrink is significant.
The EU has amended its guidelines to allow governments to dish out cash, but the bloc has also made it clear that there must be an exit.
There will be differences among airlines because member states have a different approach also within the rules. Sweden have made a scheme that benefits everyone registered in Sweden. Other member states have made more selective individual deals that sort of deal with the individual company, and that is fully justified. One of the things I think it's important to note in the deal that the French government made with Air France and that we could enable was that they made green conditionality for the funds going into the company. I find that to be very important, that member states, they follow up on their obligations and what they say about greening the European economy, but also doing that when taxpayers step in with a lot of funds for an individual company.
Do you think then that there needs to be more conditionality, whether that's around climate change or something else, when it comes to the bailout of Lufthansa?
Well, from the Commission side, with the legal basis that we have, it's not for us to do that. but we encourage member states who are dealing with the company in question to say, well, of course, the fundamentals will have to be right. If taxpayers step in, they will have to be remunerated. At the same time, there must be an incentive for the state to step out again because of level playing field issues. So management should not get bonuses, shareholders should not get a dividend, no share buyback issues. But since there, of course, will be other companies who cannot be aided or who will not be aided, there is a point in saying, well, if you can, well, consider what would be the next steps in greening this company.
Despite the efforts of the antitrust authorities, Mark Manduka, aviation analyst at Citi, thinks European aviation will look very different after the pandemic.
In many ways, in terms of complete and utter four carriers running 80% of the market share a la US, I think that ship has sailed. I think we get close. And I think that ultimately what you're going to see is you're going to ultimately see these long-haul airlines undergo a gradual nationalization process. And you've seen this in different parts of Europe, particularly in Italy. And what you'll be left with is effectively a collection of airlines that are purely there to serve government purposes. Yes, they may have a bit of stub equity, but they are effectively there to serve government purposes. And this is very much on par with what we've seen in the Middle East. And effectively, those routes are destinations and jobs largely controlled by the governments that order them. That's on one end of the barbell. And at the other end of the barbell, you have low-cost aggressors that their major goal is to take away slots from those effective government entities that sit in those expensive 8 a.m. and 5 p.m. slots in those key airports. It will be a gradual osmosis market share shift from legacy into low cost over the next 5 years.
Do you see any sort of cross-border collaboration between European and American airlines doing, more than they had, for example, less competitive and more cooperative?
I think one of the things that we've been looking at very closely across this idea of collaboration, as you talk about, particularly on the long haul, is the idea of what happens when markets recover. Clearly, we're going to be in a position where domestic recovers relatively quickly, as we've already seen in China. Clearly, we're going to be then in a position to see the European and the more continental approach repairing itself. I think one of the biggest questions out there that no one's really answered is what happens to long haul, and it really measures on your point in regards to collaboration, Bonnie. The reality is that I see a secular pressure here on long-haul corporate travel, possibly as much as 25% versus 2019 levels. Trust me, in that kind of market, there's not going to be many people who want to collaborate on a market that's 25% impaired. So I think that's the big question that people need to ask. And over time, that only plays further into my thesis that the idea that we're heading more towards how the Middle East operates for some of these carriers in Europe.
Coming up, it's not just the airlines feeling the pinch. With carriers being forced to delay or cancel aircraft orders, what are the manufacturers doing to survive the pandemic? We'll find out next. This is Bloomberg. Welcome back to Coronavirus, Grounded. I'm Guy Johnson. So plane makers like Airbus and Boeing were riding high before the crisis. But with airlines being forced to delay aircraft orders and cancel plans for new ones, the manufacturers have been forced to dramatically downsize.
We have to face a very unprecedented situation, and we're facing that reality now. The situation of the airlines, our customers, is a very difficult one. Most of them have their planes to a large extent on the ground. That's unprecedented to have this at a global scale, and therefore we have to adapt. We have challenges as well on the supply chain, so we are recombining all our data points to basically move forward. And what we've done last week was to define a new production rate, a new production planning by plane, to be able to give the right direction to our partners, to our suppliers, and adapt to the change in the demand. Our customers are in a new situation. We have to adapt to that new situation too.
Just in terms of how you see this story developing, how much visibility do you actually have at the moment? I would imagine very, very little. So Cowen, the investment bank, it was out with a report over the last couple of days saying that it sees aircraft deliveries down 40 to 50% over the next 4 to 5 years. Is that what the future looks like to you, or do you think that the shock is going to be shorter and sharper?
Well, I don't have a crystal ball, and we're all trying to assess, as I said, the depth and the duration of the crisis. We think there will be a large difference between the wide bodies and the narrow bodies, the single-aisle family. The latter will probably recover much faster. What we see for this year is probably something like minus 30, minus 40% in terms of aircraft delivery, at least that's the today's understanding of the situation, but it's still very dynamic. We've seen the recovery in terms of passengers flying behind us in China already. So China is very interesting because it's a place where we can try to assess what will happen for the rest of the world. But I think the figure of 40 to 50% over the next 4 to 5 years, in my view, looks quite pessimistic.
Rolls-Royce is one company that is especially exposed to the wide-body part of the market. Its giant Trent engines power many of the world's biggest aircraft. But with long-haul flights likely to be the last to return, CEO Warren East has had to make the tough decision to cut 9,000 jobs.
We're very sensitive to the fact that, you know, it's a terrible prospect if you're told that you might not have a job, and we want to remove that uncertainty for employees just as soon as we possibly can.
So what, in the next couple of months, or will it take longer to make a decision on the closures?
I think we're not talking weeks, we're talking months, but not many months. I mean, the number one answer here is as soon as we possibly can. You know, this is something which is, you know, it's a very serious impact for our business, but we need to take this action now. We need to protect the future of the employees that we will have in the future. And that means protecting our business. That means getting capacity and demand in line. And the uncertainty is a consequence of that. We want to minimize it.
What will be the longer lasting concerns over the next 12 months? I know, again, how many more job losses can we see with these plant closures? It'll be difficult. When do you then expect a pickup, even if it's not going back to the normals, you know, pre-COVID-19?
So there are two distinct phases. There's the trough and when do we expect that to pick up? And that is about surviving right now. And we believe that you know, we can get through this period of immediate disruption where, you know, air travel right now, I mean, in April, our flying hours were down something like 90%. So what we're doing this morning is not solving for that trough. What we're doing this morning won't be affected whatsoever by you know, how long it takes to start recovering. However, when it does recover, this is all about what levels do we expect it to recover to, and we expect it to recover by, say, the end of 21 back to levels that are about a third less than we saw in 2019. And then we expect over the following years growth to resume so that we get back to those 2019 levels over several years. And as I say, that could be 5 years.
That's it for our special program, Coronavirus Grounded. Stay tuned to Bloomberg Television and Radio for continuing coverage on this story, and check Bloomberg.com for the latest news and analysis 24 hours a day. I'm Guy Johnson. This is Bloomberg.